what will happen when Russia goes to Ukraine? Is that on your radar screen? Isn't that something that could be significant?
Yeah, it just goes to show how focused we are on, this story of the day that we seem not to be noticed what would otherwise be the prevailing headline. Again, I don't think we're watching a looming World War III here. Again, a lot of things, when you don't know the outcome, whenever something's resolved, you can look back and say that wasn't so bad. When we're in the middle of something and it could go in any number of directions, even though it's unlikely, people get a lot more, it becomes a lot more problematic in people's minds. But, generally, for the markets are kind of amoral. And I don't know that it necessarily has to affect most equity prices. I think in some kind of weird way, if there is that kind of a thing, maybe the market starts to think that the Fed will be a little bit less aggressive on raising interest rates or taking away, their monetary stimulus. Certainly won't be bad for oil price, may be bad for the country, but it won't be bad. Energy prices and commodity prices will go up. That's the usual pattern, but it doesn't have to be bad. We're in we might be entering that realm where kind of bad news is good news, because bad news will kind of slow up the Fed and make people think that, the inflation thing is a little bit more self-correcting and the economy is slowing anyway. So, I don't know, but I remember, living through a number of, wars and things like that. It's not necessarily a horrible thing for the equity market, although it will be a bad day the first day that happens.
Right. Hey, Lloyd, question for you. I don't know if this is a hard question for you to answer or not. Do you want to own the banks in this environment? And the reason I ask is there's a view that at least the traditional banks, the JPMs, Bank of Americas, are going to benefit from higher interest rates, and therefore the yield curve is going to go. Larry Fink was on our air the other day, said he thinks the yield curve is actually going to remain flat. And then you've already seen the distinction between where the stocks of a JPM are compared to where a Goldman is right now, your former firm.
Yeah, well, I think banks have traded, have earned a discount in the market because every once in a while, periodically, they had, it seems like every 4 or 5 years had the crisis of the century every 4 or 5 years. And I think that, extra additional risk, I don't see any of that kind of looming on the horizon. Bank balance sheets are, look, away from any additional tailwind you get from a change in the in interest rates or the yield curve, they're making a lot of money in this market. And by the way, a lot of, especially, for example, the capital markets banks and the trading banks are making a lot of money. And by the way, they can make a lot of money when the market goes down and market goes up, just as long as there's a lot of activity. The problem is those earnings have a low multiple applied to them because of the experiences that I've spoken of. But there's also a new regime there. The banks are operating under very, very tight oversight. And I know there are people who say, oh, my God, it's been loosened up. But no, it hasn't. The capital requirements are very, very stiff. And in a way, I'm not regretting that, because if the banks were competing with each other, maybe by now they would have taken riskier positions. But the rules that apply and the Fed hasn't let them. And so, whether, despite maybe their best efforts to be riskier, they weren't allowed to be riskier. And so I think they're in very good shape, and the earnings have been there, and they trade on an unbelievably low multiple. So, yeah, the risk, of course, is that the multiple stays low. But at some point, people will be, they do earn money. They do buy back shares. They could raise their dividends and probably will. And so I don't think it's a bad place to be. But then guess what? I talk my book.
Shepard Smith here. Thanks for watching CNBC on YouTube.